Okay, as your babe is always ready to make money and to share the options that, outlines how to make money with you. Now let's go. Like I said, this book has Nigeria in it. And when I say Nigeria in it, it is because all the informations that are in this book basically shows how Nigeria works, the options available for us to invest and all those things. So, like I've been reading for an exam, so it's not like anybody gave me the manual. It is what I have, learned from reading for that exam. And I thought, okay, today let me share with you some of the federal government security options that are out there for us, to buy into, because I have some of them right here. And as I've now found myself in a place where I'm saying this is not a financial advice, this is me just sharing what is working and what I know with you. That is that. So just take whatever information that is in it that is useful to you and use it accordingly. So now let's get right into it. So the first federal government, securities or investment option there is the FGN bonds. So what I will try to do is to share with you like the relevant informations. All these things are educational things. So let me just share with you what is relevant to you. And the main objective of the FGN bond is to finance deficits. Yes, it is interest bearing. Minimum subscription is 50 million, 1,000. That is why you find that it is banks that gather the money to help you invest. So it's not a matter of the 1 million you're investing. That is not what they are usually giving to the government. The minimum subscription is 50 million, 1,000. So just know that And now the dealers of this is the PDMMs, which means primary dealers, market makers. So I think we'll do another video on how that works and all that, but just know that now the one I've always preached on this page, Nigerian Treasury bills, it is another option to finance fiscal deficit of the federal government. This one, it is a discounted instrument. It is not like your normal interest bearing instrument. So basically how it works is you invest, let's say 1 million naira, and they say it is at 20%. They give you the 200,000 naira, which is the 20% of the 1 million naira, and invest the 800,000. But then at the end of the tenure, that is when you are getting your interest. That is why you see that some platforms are giving you interest at the end of the tenure, because it is a discounted instrument. If you do not understand that, maybe in another video we'll do like a complete, breakdown of that. But now, just like the FGN bonds, minimum is still 50 million, 1,000, but banks gather and then invest. So your money is just a small fry in the bulk that is needed for investments. Yes, so the dealers are the money market dealers. So money markets, mostly revolves around the central bank. So you see that banks are able to gather this money and then maybe invest through the central bank. That is why you see that banks have the options of investing, unlike the PDMMs, which is controlling the FGN bonds. So you get the gist. But now we have the FGN savings bond, which is like one that was initiated to encourage household savings. It bears interest and the tenure is usually 2 to 3 years. Auction monthly. That is information you need to know. And another one, but like this one, the minimum subscription is 5,000 naira and the maximum is 50 million naira. So just have that at the back of your mind. Now the dealers are stockbrokers. So you find that maybe you need a stockbroker to help you buy into FGN savings bonds. So if you know any stockbroker or just meet them and say you want to buy FGN savings bond. Now we have the green bonds. This one is usually requested for on need basis. So it is basically like any investment that has to do with financing environmentally sustainable projects, green projects, and it is interest bearing, but tenure is 5 years. So, and another thing, minimum subscription is 10 million naira. Now dealers as well is PDMMs, primary dealers, market makers. Now we have the FGN Sukuk bond, which I've shared with you guys on this page. That video went viral and everybody was asking so many questions. But basically, this is an investment option where the federal government uses to finance infrastructural developments like your roads, hospitals, anywhere it sees to cook this, to cook that. Yes, that is what it is. And it's basically, it is not an interest bearing option. It is more of a profit sharing option, like an Islamic related kind of investment option, because they do more of profit sharing rather than interest bearing in anything concerning non-interest banking. That is their MO. So this one, minimum subscription is 10,000 naira. That is why many people can buy into it. So just have that at the back of your mind. Dealers, stockbrokers, and PDMMs as well. Because like I said in one video, that PDMMMs are regulated by the DMO, that's the Debt Management Office. So you can imagine that anywhere you find PDMMMs, you find that it is government related kind of investment option. They are the ones that handle it for the government. So debt management office now regulates and checkmates these people. And the last one is the FGM promissory note, but this one is more of for settlement of outstanding obligations from the federal government. Maybe they are owing one local government money. They can now raise like a promissory note and say, okay, we are going to be paying you plus this interest, that kind of thing. And that is that. Tenure, this one, it does not concern us because we don't have any option unless you are operating a local government that I don't know of. But that is what it is. These are the 6 options of federal government securities out there. So do with that information what you will. But I just thought to share this with you. Now, I think let me go and explain what these treasury bills, how it works, because it has always been a serious confusion, but let me try my best to explain it. Okay, now the federal government wants to raise money. They use treasury bills as one of the gateways to raising that money. And most times it is considered like an open market option or money market option because, it is still used to mop up money in circulation, but it is mostly to finance the federal government deficit, right? But now I've been trying to explain this, how treasury bills works so that people will have an idea. So treasury bills, for one, is considered like a discounted instrument. So it is not like an interest-bearing instrument, but a discounted instrument. But all you need to know as a Nigerian is that, you are getting, a difference compared to what you invested. So let's say you're investing 1 million naira and they say it is auctioned at 20%. These numbers are for ease of calculation so that, we can get it. But now, you say you are investing 1 million and they say it is at 20%, maybe for 1 year. The higher the tenure, the higher the interest. But let's say 1 year for ease of calculation as well. You now say you're investing 1 million. So that 1 million naira at 20%, what you are basically investing is 800,000. So they will take 800,000 and pay you back 200,000. Which is that 20% we talked about, you remember? They will give you 200,000. It is now at the end of the tenure of the investment, you now get 1 million naira. It is in that 1 million naira that you're getting that your interest is at. So what you had initially given to the government, like 1 million naira, they paid you back your 200,000 because it is 800,000 that they want you to invest. I'm trying to break this down at a layman, type of understanding, because I know not many of us will understand these things when you start talking about coupon rate, discounted window, and all those things. But just know that, when you invest 1 million naira and they say it is at 20%, they'll give you back your 200,000 naira, which is the 20%, because the main investment is 800,000. Then at the end of the tenure, that is when you now get your 1 million naira full back, because the interest is now in that 1 million naira. But I just know that you're always going to get, money. But if maybe for exam purpose or whatever, this is like an easy way to explain it. 1 million naira, you get the discount of 200,000 naira, which is at 20, which is the 20% the bond is selling for. Then at the end of the tenure, you get your 1 million. That is why you now find that, okay, Bamboo, instead of them doing that discounted whatever, maybe because they usually give options of investing like maybe at a very low percentage or at a very low number, maybe because you can invest like 10,000 naira in Bamboo, I believe somebody mentioned that. But in banks, that will not fly. 1 million naira, 10 million naira. So because the minimum you are supposed to invest in treasury bills is 50 million, 1,000, and banks have to raise this money before they can invest. That's why you now see that some banks are telling you they are investing. You can only invest 10 million naira because they've not been able to raise up to the 50 million naira. So whoever is coming to invest has to now invest a huge number or a huge amount of money. So that's basically how this treasury bills works. It feels like this page is now about treasury bills, but I'll just try and be sharing with you guys whatever I learn. Whatever I know, and I hope it is helping. It is giving you an idea of how Nigeria works, because this page, I'm talking to a professor, but guys, I'm not a professor. I'm just sharing with you what I keep learning every day. And remember, I'm from a background of chemistry, but the girl loves to learn, and I'm learning, and I found myself in the finance industry, and I'm loving every bit of it, hoping to grow. Just imagine peace working in World Bank, IMF. These are goals. These are my goals. Like, it will be very nice. So, but for now, let's keep doing what we are doing and enjoying the journey as we go. I'll see you guys in my next one. If I am to earn 100 naira for every time somebody asks me What is treasury bills? How do we invest in treasury bills? By now, $10 would have got nothing on me. But $10, wait, I'm still coming sharp. But let me just give you guys a brief, introduction into treasury bills. But let's get right into it. So, what is treasury bills? So, treasury bills is like a short-term investment option which the government used to raise money. For, let's say they have deficits in budget, they have to cover up for some expenses. Treasury bills is a good way for the government to make money from the society, basically raising money. And it's another way that the Central Bank of Nigeria used to mop up money, excess money in circulation. You know how every day things keeps increasing, and you keep wondering why? Inflation. And what causes inflation? Inflation, when there's excess money in circulation, it causes inflation. So when they say money in circulation, if the money is not in the bank, it is in circulation. And basically, the central bank knows how much is printed or how much the total amount of money in the country is. So they usually calculate this based on what is in the bank. The remaining is obviously outside. So this is when they now try to control interest rate and all that. So treasury bills is one way that the central bank used to mop up money, alongside the government using it as a short-term investment option to, raise funds for when they need covers on certain projects. And treasury bills has 3 months tenure, 6 months tenure, 1 year tenure. And it is one of the safest investment option you can have out there because it is backed by basically the government and central bank. So your money is not going anywhere. And the interesting part about treasury bills is that you have paid your interest upfront. So when the tenure for your investment now elapses, then your capital is paid back to you. But one question that many people always ask is, can I, take my money halfway into the tenure of my investment? Yes, you can, but don't expect that you'll be getting the full money back because you already got your interest upfront in the first place. So when they are giving you back, the remaining part of your money or the money that you invested for as capital, a portion of it will obviously be removed. So that is another thing. And one good thing is, treasury bills is, I feel like, if you can create a situation whereby every month you have treasury bills. My sister came around for a training in Lagos, so she's currently staying with me, and we've been talking about money so much. It has been quite an interesting, conversation, and I've been enjoying every bit of it. But it got me thinking, from our talks, I just found out that okay, it feels like I have a very stable life. Like I've just been able to set up my life in such a way that even when salary is not enough, like with the investment, with with the way I've set up my life, basically, I will never run out of money. But one thing that made her talk about how stable my life is or how I've set up my life is the fact that I've just been able to invest in treasury bills in such a way that every single month I always have something coming in. So like I said, I've been working for 7 years, right? And I believe I got into treasury bills like maybe 1 year or 2 years into my job. And since then, I've been investing every year in such a way that every single month I make sure that I invest. So now, later, 7 years later, like it feels like I'm reaping the reward. Whether my salary is enough, whether it's not enough, I know that I'm always going to be getting interest from treasury bills because I always do the yearly option, and because the yearly option has the highest interest, like I'm getting a good return. And the good thing again is that treasury bills follows inflation. So if inflation is increasing, if interest rate is increasing, that is how my interest is increasing as well. Just imagine the fact that I've been investing for so long now, it now seems like from January to March, or from January to May, sorry, every month I have something coming in. And this is aside from maybe other investments I've done, but this one just acts now as a buffer to my salary. So I never really used to think about it, but I just knew that I wanted to be investing. But then now that I look back at it, from my conversation with my sister, I found out that I did something that many people will not really do, or many people will not really think of doing. Maybe this month you invest this and next month you invest that, because treasury bill is usually sold every 2 weeks. So if you can create a situation whereby every month you have treasury bills, so that when the tenure elapses, the next year, every month again, you have interest that is going to come in, or at least that is what I've done in such a way that every month I shall know that extra money is coming in. Salary aside,
Treasury bills has got me covered. And there's another one that I found out about, but anyway, that is basically it about Treasury bills. But there's another one that I found out about recently that I want to go and start doing now. I just need the kudi, big cash mutual funds. So this one, many people really talk about Stanbic IBTC, and I know many people that use this opportunity to make a lot of money. So you invest in it, and I think the percentage is so high that it's around like 20% and above. That is what I had anyway. When I get the money and I want to go and invest, I'll take you guys through that. But that is another investment option that you can look into. But treasury bills is one that I've been doing for so long that now over the years my investment has so much accumulated that every month I always know that I have something extra coming in. So it is quite a good investment option. But that is one of the money market investment options. But just and this one is usually, money market is usually regulated by the central bank, while the capital market, which is stocks and all that, is usually regulated by the Securities and Exchange Commission. And one thing I always try to find out before I invest in any security, in like bamboo and all that, I try to find out, is this company registered with Securities and Exchange? So that should give you an indication of okay, this place is safe to invest in and all. Now you know what treasury bills is, you can go and invest. But I like the 1 year option. Sometimes the 3 months options is good again, but I just like to know that my money is safe for the government, and not safe for the government, safe with CBN. So then at least I can keep making money from there and adding it, reinvesting it, using it to, like, the interest I got from January, yes, no, February treasury bills. That was what I used to register for CIBN exam. So you see, I'm now reinvesting it into improving my portfolio, basically my certification portfolio. So
What platform do you use to invest in treasury bills? Go to your bank and tell them you want to buy treasury bills. If you can go to your bank and tell them that you want to invest in treasury bills, it is as easy as that. But one other place that you can go to if you don't want to be doing bank drama is Bamboo. I believe Bamboo has treasury bills, options to buy treasury bills. I've seen it on their platform. But to me, if I'm to advise you, I would just say go to bank. Although they both have similar interests, at the end of the day, you just have options and you choose where you want to go to. So that is that about that. Treasury bills deduct tax from interest, isn't it? Guys, I don't know what it is about this conversation with tax, and many people believing that there's tax with treasury bills. So I don't know if there's a way they do the tax, but for me, like all the while I've done treasury bills, I've never been taxed, because let's say now, it's unless they remove it from the percentage that maybe the percentage they're using is 21, and then maybe they now say, okay, the percentage they're giving to people that are doing is 20%. Maybe that's how they remove the tax. But so far so good. And even when I checked it online, there was no tax anywhere. And whenever I invest, let's say I invest 1 million and it is at 20%, I get my 200,000 naira complete. Like, I've seen this tax statement several times, so I don't really know where it is coming from. But if you think maybe there's a way they do the taxing, let me know. Unless this is like maybe commercial banks doing their thing, because I know that the official rate can be 20% and commercial banks will give you like 18%. I just thought that was because they are in it obviously as a business as well, so they are making their own interest from that 2% commission that they will take out. But for tax, I've never really heard of any, because I always get my money complete. Like I said, unless it is in the percentage that is given. But I believe there's no tax. Google it. There's no tax.